Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, July 7th, 2013. We are coming off of a shortened week in the markets, and yet the bulls took absolutely no break on the holiday. That's why in the weekend update you'll see one of the first things I say is bulls blew off the barbecue, because it seems that way. This move here of this week, which has taken us actually right to a downtrend, has been happening on pretty low volume. We had somewhat of an expansion of range on Friday, but remember the SPX is not a good measure of that. You really want to look more at SPY to see what the candle looks like, because remember your S&P chart is not going to show the gaps. But the volume on Friday was pretty anemic, about 2.5 billion shares traded on the NYSE, and obviously the days before that were pretty low, as equities were closed on Friday, but futures did trade, and Wednesday was a half-day session before that. So here actually is Wednesday's session in the S&P. So my bias going forward here is bullish if we can get over this line, with a caveat that I'm keeping in mind that the structure in the profile has been poor. We'll get into that in a bit. And the volume has really been low. Looking at the cash market here, it's really hard to draw a line in the sand in terms of what would keep this market going or what would make it fall apart. And for that, we really need to go to the futures market. And I'll show you why. Because in the futures market, I've left this Fibonacci retracement on here from the high to low. And you can see here that the futures are coming right to the 61.8 fib, so moving over the 61.8 fib from high to low definitely puts the market more into bull territory. And beyond that, I wanted to show you that in the futures market, because it trades 24 hours, there's a really important low here that's equal. You don't see these moves down to here in the cash market all the way to this low because it doesn't trade 24 hours. But in the 24-hour session of the futures market, we have touched off this level multiple times. And notice that when we had this move down here, we moved back up and then broke the line, and then in coming back we supported every single time just under 1600 at the 1595 area. So this area is obviously really key. If the market was to reverse back to the downside, I would be looking for this area to act as a magnet at the lows, and then a subsequent break of this would bring in lower prices, but that would be only if the market was to reverse from here. To the upside, obviously, if we start to close a daily bar above, I would expect a little bit more trading volume is going to come into the market next week as opposed to last week, so we'll see if the market can get up over this line and move up. Now, in the bigger picture, what makes this, I think, even further dicey is the fact that if we go back to the S&Ps, notice that on the weekly, we are still way above the low end of the dominant channel, and we're really getting ahead of ourselves because notice how weak the recent pullback was in terms of taking us basically just about to the midpoint of the channel, and that's pretty common. You get that very often. But look here, you came basically to the midpoint of your dominant channel, caught support there, and have started to rally again. So what you want to take away from all this is the fact that going forward over the rest of the summer, the market really needs to make another higher high in order to basically keep buyers interested, right? I mean, they want to sell to people further on down the line at higher prices. So this is going to be really key to see if we double top it just under the 1700 or we make another high. To me, the whole thing is suspect because it's very steep, meaning that we have not had any type of a meaningful correction, or at least not a long enough meaningful correction like here or here or here, where we revisit the bottom of the channel and then pick up steam and get energy to continue forward. So if we fail, again, the bias is really neutral unless that ES is taken out, so just go there. And if we go higher, I would say be cautious, because obviously the target would be to the prior high. But again, remember, the volume has been poor on this move up. It's not really healthy for the market, I don't think, to be moving up on shortened sessions and not much volume trading on the NYSE. Okay, let's take a quick look at market profile. I am in the process of switching our software provider over to somebody new. That's all I'm going to say about this for now. This is kind of a big surprise for you guys, which I think you're going to absolutely love. I'm actually starting work this week with a new provider here. You'll see that the profile looks a little bit different. There's a little bit of added pizzazz to it in terms of contract volume at each price. This is a pretty snazzy piece of software that really does a lot of cool things. I'm going to be talking about it a lot more in these videos and also some other educational training videos, so keep that in mind. But outside of that, I just wanted to point out that this is what the distributions look like in the ES over the last few days. In the holiday sessions. You can see here, obviously, on the 4th of July, equities were closed, but futures traded a little bit. And I'll get rid of this here. Futures did trade a little bit for a very shortened session. And then also here on the 3rd, the day before the holiday, we also traded for a shortened session, a little bit longer than here, obviously. But what I'm mostly looking at here, because obviously we can get as granular as we want in the profile. It's really endless. I mean, you can get so granular and just keep looking deeper and deeper and saying, okay, we have an anomaly here, and we have developing point of control moving higher. Like, for instance, these yellow highlights here show you where the point of control, where the fairest price to do business started earlier in the session and then slowly migrated higher. There's a million things. And again, I'm just trying to kind of wet your whistle, because I'm really getting deeper and deeper into the profiles. And with this new piece of technology, I'm going to be really dissecting it a lot more in detail in videos to come, and also on our Tasty Trade program. But leaving that aside, again, I just wanted to focus on the fact that we closed dead at the high on Friday's session. We traded 2.5 billion shares on the NYSE. This is very low. We need to be trading about 4 billion shares on the NYSE in order for it to be a more healthy volume type day. The fairest price to do business, which is where the majority of the volume and time was spent on Friday, is down here. That's 1619.25, right in there. That is the volume point of control, and you can obviously see that here. Right? Look at your contract volume. More futures contracts traded at 1619.25 than anywhere else, because obviously it's the highest number. 42,000 contracts traded there, and the most amount of time was spent here as well, because it's the widest point of the profile. Most time was spent between 1620 and 1618.75. However, look at where the market closed, and we did not get really good elongation of the profile to the upside. Actually, we did close outside of the value area, and we closed on a little bit of a spike move higher. So takeaway from this is an excess high, possibly. If we were to fail on Monday early, you can treat this as an excess high on early shorts, depending on where we open. You can have a stop right above here, knowing that it's an excess, with possible move back to the point of control to retest. Or if we move higher, then obviously it was not an excess high. Obviously the market didn't auction high enough to bring in strong sellers. But basically that's just a really simple takeaway that I look at on the profile right away. Is a very surface kind of look at it, just to see where did we close and where is value. Did value move up with price? Where's the value area? Where's the point of control? But obviously you can see that on Friday the greatest amount of trade went off here in the middle. These green areas, by the way, are where the top 25% of the day's volume in the futures market went off. So you can see we closed pretty far ahead of that. So you can begin to get a feel for how this starts to tie in with the things that we see in this chart, and all of this in terms of getting a good analysis day after day, both on an intraday basis and on a longer term basis, is really tying in what I see on the technicals with what I see in the profile. Okay, let's take a quick look at some jumbotron stocks, as I call them, and then also look at oil and gold to wrap it up here. The relative strength in some of the marquee names, as I call them, has really been phenomenal here, and I am definitely keeping an eye on them for possible moves higher. Look at Google here on the weekly is holding up pretty strongly. If you look on a daily, you could easily draw lines like this, and this trend line is now ascending even further. So we do have a wedge pattern forming here in Google. I believe this will tighten up and could be building price to push up higher. I said a long time ago that I think Google will be a $1,000 stock. Some people sent me emails actually laughing at that. I don't really see why that's a laughing matter, because it really appears that it's setting up in that direction. You can see this sort of rounded cup here, and there's possibility of a break higher. And besides Google, a lot of them are acting this same way. We call these the jumbotron stocks. We used to call them leadership stocks. Now we changed the name to jumbotron stocks, and we're talking about some of basically just these expensive stocks of famous companies that everybody knows about. You have a similar pattern in Netflix after the gap up. Very, very choppy. I probably wouldn't trust Netflix as much as I would trust Google in terms of pattern, but again, building up pressure underneath that downtrend line. And then you have some stocks in the jumbotron list that have actually already broken out to new highs this past week, actually. And again, in a low volume week, in a holiday week, and yet demand for these issues was big enough that it just pushed them right over. Chipotle was one of them, and MasterCard was another. MA, again, making some new highs. Let's take a look at Amazon, again, also retesting the all-time high there, about just less than $1 away. And Priceline as well. Look at Priceline, also peaking up over a new high. So this is also interesting in that we're seeing this sort of divergence between these jumbotron type stocks, and yet on low volume, just more pieces of the puzzle, more things that I'm thinking about tying in. If the market does stay strong and we get the SPX move above the downtrend line, I would say we'll probably see further gains in some of these marquee names that I was just talking about. Okay, let me wrap up here with a quick look at oil and gold. Crude has already set up for a short. I am actually short crude this weekend, and I sent a tweet saying I was a little bit perturbed in that it triggered with like 5 minutes or something to go of the overnight session, which ended, or a Friday session, which ended at 5:15 p.m. right here. Here's the 5-minute bar from 5:10 to 5:15, and I am short crude currently at 103.62, and the reason is obviously the weekly trend line. It moved right to it. Now, do I really want to be short going into the weekend with this opening up on Sunday night? I would rather not, but the trend line is the trend line, so what I did is I just cut my size down smaller than normal, and I went for it. And I got filled, like I said, a couple of minutes before it closed. So we shall see if crude bursts through this line or not, or if there's a reversal. If there's a reversal, I'm looking to cover somewhere in the $100 area, or I should say 98 to 99 here at the prior highs on a reversal. I think the crude is spiking just on news. That should be obvious with the Egypt situation and whatnot. There's also technical strength here breaking out of this pattern. But like I said, a trend line is a trend line, and I do like to short various commodities or buy them at long-term trend lines for a swing. So that is what's up with crude. And last but not least, I'm going to wrap it up with gold, because gold had another bearish week this week after consolidating a little bit. If you look at the daily, I think that gold bulls were trying to get a little bit of hope here, and that we weren't going to break down further. It looked like we were building a shelf here, and they were looking for gold to break up out of here. But instead, it actually snapped down. So I'm still keeping my focus here on this monthly. And now, if you recall, I was talking about this, a couple $100 ago here, and saying that this would be the buy point. And now it's getting within about $120 or so, maybe $150. We're looking at about 1080 there, and we're at 1220. So let's call it about 142, right to the 1222, to get us right into the 1080 range, where I think there's really long-term support. And I think gold is going to be a screaming buy here. This is on a monthly chart. I think it's going to set up for a bounce that's probably going to last, I would say, at least a month if it can get down there. I don't know if it's going to break trend or come back. Obviously, you've got downtrends now that are all forming, but notice that as these downtrends are forming, they're getting steeper and steeper, and usually that's unsustainable. So we'll see if gold does actually snap a bit lower in time to come, and there will be some trendline support possibly around 1080 to 1100. All right, that's all I have for this week. Last but not least, again, I don't want to get ahead of myself, but I will have a lot more information on this new market profile software that I'm using here. I'm setting something up on our website for it, which you guys are going to really dig. So just a little teaser there on all that. And I will see you guys next weekend. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.